weighing the situation, Dan Gramza, President, Gramza Capital Management. Good morning, and thank you so much for joining us, Dan.
It's great to be with you, Alex.
Dan, it's extremely interesting what's going on. I was wondering what's going to be the medium to long-term impact on markets after this announcement, which was, by the way, Bloomberg News scoop, and later, of course, confirmed by the New York Times and all other media.
Well, let's start with what it is. He hasn't made a formal announcement yet. Biden hasn't, which is expected to come next week. So what did we see? Did we see the market reacting to reality, or did we see the market reacting to a possibility, to a concern, or anticipation? That's what we're seeing. So I don't look for a down move. I do look for a stronger close as we finish this week out. In other words, another way to look at it is, do people want to go home short this very strong market that we've had in the stock indices? I don't think so. So I think yesterday's reaction was just that, a reaction. So I don't look for a big day down. I look for an inside day to possibly even higher, depending on the attitude of the market as we go into the weekend. The next important time for us then would be Sunday night, 5 o'clock Chicago time. And that's where these markets open up again. So the other thing we want to remember is we finished today out. Asia has not had a chance to respond to it. So if we finish stronger or weaker, that's why that Sunday night becomes so important. It sets the tone, and it can set the tone of how Asia reacts and possibly the tone for the rest of the day. So it's an interesting market situation, but it doesn't change my longer term view. And by the way, these taxes can have a big impact. If you're living in New York or if you're in California, those states also tax long-term capital gains. And in New York, the city has a tax on long-term capital gains. So there, that tax rate could approach 60%. But this is the beginning of a discussion. So are we going to end up at 40%? I don't think so. Someplace in between, possibly so.
What's next for equity markets? Do you think it's possible to see a great economic recovery with a downturn when it comes to the markets? This is actually what we saw in 2020, downturn of the economy and upside trend when it comes to markets hitting almost every day new all-time record highs. So can we imagine the vice versa, or that's not possible?
Well, it could be possible. I think that's a logical way to look at things. My feeling is I think that the upside is still where I'm looking. I'm bullish on these markets. And could we have this economic situation that seems that it may not support it? So far the earnings reports that we've seen coming out are positive to the marketplace. And we also want to remember that the stock market looks forward. So what is the outlook that we're seeing from the stock market? And I think if the earnings stay positive and we still have our economies that are throttled down, that are not at full capacity, we still have a lot of potential energy that has not come into our economy. And that is why I think longer term we're going to see some bullish movement in these indices.
This is very important. I just wanted to say that today the Nasdaq is up about 0.5%. Let's have a very quick check on the tech sector. So far, the FANGs are pretty mixed. The Snapchat doing pretty well. This is, of course, thanks to the earnings season. By the way, Snap's revenue surged in latest quarter as the company gained more Snapchat users, continuing its streak as social media use remains high during the coronavirus pandemic. The social media company's first quarter revenue rose 66% from a year ago to $769.6 million, topic analysts' expectations of $744 million. Snapchat ended the quarter with 280 million daily average users compared with 265 million in the prior quarter and 229 million a year ago. So this is pretty interesting, Dan. We did see kind of a pretty opposite scenario when it comes to the semiconductors. I just wanted to show you very quickly Intel. It also reported earnings yesterday. I just want to go very quickly through the numbers. By the way, first of all, the outlook, Mr. Gelsinger, the new, of course, CEO, said the outlook projecting sales of $77 billion this year, $500 million higher than previously expected, is a supply-constrained guide for the year. Intel said first quarter sales fell 1% to $19.7 billion, but beating Wall Street estimates. Net income weighed down by cost of a legal settlement was $3.4 billion, excluding the pending sale of its memory business and other items. Intel said revenue was $18.5 billion and net income was $5.7 billion. So then, so far, so good so far when it comes to the earnings season. What's your take? Do you think that estimates and expectations are too low, or just companies are doing too good?
Maybe it's a combination of both. I think, from my point of view, anyways, the earnings estimates that we've seen, I think, are reasonable in terms of where our economy is. So our ability to recover, I think, is still there. And these earnings reports, they do have not only a number impact, but they have a psychological impact to the marketplace. And I think if the earnings stay positive like they've had for the last number of quarters, it keeps that psychological element in the marketplace. It's a foundation concept that we look for to fuel a stock market.
I was wondering, what's your take on the foreign exchange? I'm sorry that I'm jumping from topic to topic. I just wanted to show you very quickly the euro dollar. A lot of volatility starting from yesterday. And of course, it's also after a post ECB meeting, which was very interesting. Not a huge announcement, but of course, Christine Lagarde and her board remain extremely accommodative. So far, the euro dollar at 1.20, gaining some strength by a 0.44% at this point. What's your take on this change, and what do you expect in the medium to long term? Are we going to see this weak dollar in the following months?
Well, I have to tell you, first, I like what the ECB is doing. They're holding the course. They're staying steady. They're staying accommodative. They're willing to be tolerant, I think, of some inflation, possibly. So I like what they're doing. I think it's very positive for the marketplace. They need to know that the central bank is there supporting the market the way they have. So I think that's a positive step. I think the euro's reaction also makes sense. You know, last time we were together, we were talking about the US dollar just starting to get some support. We saw a little bit of buying coming in. But the issue then, as it is now, is can it follow through? And so far, the US dollar, if you look at the dollar index, has really been struggling. When that happens, where does that capital go? The euro, the Swissy, Japanese yen, Aussie dollar, British pound, Canadian dollar. Those are all the currencies that make up the dollar index. So I like the action that we're seeing here. I think it does make sense. So I look for a stronger euro.
And what about the dollar? Specifically considering the fact that we're going to be hearing from the Fed next week.
Right. I think the Fed's going to do what the ECB did. Every time Powell has spoken, he has stayed the course. He's also, I think, done a good job. And that is, I don't look for anything new. That they are willing to be tolerant of some inflation increase and keeping interest rates the way they are, not looking for any increases. They don't have a reason to. If we look at inflation, inflation just isn't in the marketplace. If you look at past rallies, if you go back to 30 years, 40 years of Fed action, what you'll see is inflation was creeping up and they would start increasing interest rates. We just don't have that environment, and we haven't had it for a number of years, really since 2009. And I just don't see that changing.
Let me ask you one final question. It's extremely interesting to see how this tax story is going to evolve, but it was normal to imagine that something similar is going to happen after all the fiscal stimulus that we saw in the United States, but it had also major impact on the cryptocurrency market. So far, we did see major losses coming from the Bitcoin, but also Ethereum, Ripple, Dogecoin, almost all of them, more than, I believe, $260 billion were wiped out of the market. So this is certainly extremely interesting situation to see what is going to be the impact further on the cryptocurrency market.
Well, I really think of that as a separate sector. I don't think of it as engaged into our economy, for one. And Bitcoin is kind of leading the way in a sense. And the other thing I think about when I think about Bitcoin, 95% of the Bitcoin is controlled by 2.4% of the holders of Bitcoin. So if that 2.4% wants Bitcoin to go down, if they want to take some profit, which engages other people feeling like, oh my gosh, this could go down to $10,000. So they want to take some profit, exit those positions. And I think that's what we're seeing here. How sustainable it is to the downside, I think that's to be determined. It's where that 2.4% want to go. So at some level, could we now start seeing buyers coming back in? I think we could. But is it connected to the rest of our economy? I just don't feel it is.
All right. Thank you very much. Dan Gramza, President, Gramza Capital Management. Thank you so much for joining us and have a great weekend.
Thank you. You too.